Ramesh, thank you very much for joining in this morning.
Morning,
wanted to start with the acquisition first.
Right.
$800 million, it's being touted as a bit expensive, which would turn out to be 9 times FY14 revenues. Can you take us through the rationale?
Well, the total outlay is $880 million to start with. It's not $800 million.
Over $800 million.
Yeah, and you would appreciate that any outlay is actually related to earnings itself. Essentially, looking at, in fact, the future earnings, in fact, the next year earnings itself, we don't believe it is expensive at all. So if you actually take it on the basis of sales to the outlay, then it looks very anomalous. So if you were to consider the EBITDA, it's close to about 16 times current year earnings. So it's not that expensive. In fact, we believe that it is less expensive as compared to other deals that have happened in the market in the recent past. And of course, you paid for future potential as well. So looking at the pipeline that it brings to the table and adds to our capabilities, I think we're very happy with this acquisition.
How are you funding this acquisition? Because you also had a shareholder approval, if I'm not mistaken, to raise 7,000 crores plus. Was it to fund this acquisition? And for fundraising, what's the plan, and how would this acquisition be funded in particular?
Okay, let's take it in two parts. This 7,500 crores resolution that we passed, in fact, a few days ago at the board level, is essentially just an enabling resolution. It is not for, in fact, raising monies right away. It's just something which can happen. It's just to keep us, in a state of preparedness if it comes to that at some stage of a revolution. If you look at our balance sheet today, it's virtually debt-free. In fact, I have a cash surplus of close to about $200 million on my balance sheet. And of course, looking at the kind of EBITDAs that we generate, which is about close to 4,000 crores, and looking at our net worth of about 9,500 crores, it would be possible for me to raise about, easily, if you look at a 1:1 ratio of debt to equity, you could look at 9,500 crores being raised. Not that any particular index is indeed a holy grail in itself, and there neither is a need to actually raise that kind of monies. So you would know that you'd be able to raise easily the kind of outlay that you're speaking about at this stage.
What are your plans on M&A going forward, and what kind of scale do you expect in the U.S. in particular post this acquisition?
So we've always broken our M&A philosophy into 3 buckets. In the first bucket, we have said that we'd be interested in certain, areas of, geographies of interest, which included Latin America, Russia, and parts of other parts of the world. The second bucket, we looked at specialty, and we've always said that we're interested in dermatological assets, looking at we'll also be interested in respiratory assets, and so on. And third bucket, where we looked at, in fact, technology platforms also. This is actually a generic asset in the U.S., but it adds to our capabilities for sure in certain therapy areas. And we still remain interested in specialty assets also.
Okay. Just another quick question with regards to this acquisition that you've made. Can you just tell us whether this acquisition is already profit-making, and would you get hold of Wintac Limited, which is a subsidiary of Gavis in India?
Okay, 2 questions at the same time. Insofar as the profits, we have said that the EBITDA margins for this business is close to 36% for in the current form. So obviously it is extremely profitable. The second question relates to, in fact, Wintac, which is a subsidiary of this company. We have not acquired this in fact, Wintac. So, it's out of this deal.
Okay. All right. Coming to the news that, in fact, CNBC TV 18 broke last evening or yesterday was the Form 483 for the Goa facility. We've got the observations with us as well. Can you just tell us if there were any sort of data integrity issues that came up, and would production go as on from the facility?
So let me be upfront on that. There is absolutely no data integrity issue in question at all. So if you have the questions, you could go through that and you would know that it is not the case at all. A lot of it relates to, in fact, SOPs and the like, which we would be complying with.
Okay. So my understanding is no data integrity issues. You're going to be responding to the US FDA within 15 days. So those 15 days are currently on?
Yes.
Okay. And can you just tell us about, in terms of slowdown of approvals, which we've seen a lot of, Indian companies which have had 483 issues plague them, their approvals have slowed down. Do you anticipate that happening?
Approvals have been slowing down for the last year and a half, we would think. So after GDUFA, in fact, whilst GDUFA itself was passed for actually looking at ramping up on the approvals front, it's not really taken that shape. So all the companies, it's not necessarily Indian companies alone, it's across the globe. You find that there have actually been a slowing down on approvals itself. In fact, GDUFA itself has the FDA itself is conscious of this, and they've come out with, in fact, a policy of clearing 60% of the application spending after 2014. And they made, in fact, a program for clearing it, 60% this year, 75% next year, and close to 90% by 2018. So potentially the way it goes by 2017. So it's not as though Lupin or, for that matter, Indian companies' approvals have been kind of withheld. It's across the entire generic industry.
How much does the Goa facility contribute to your revenues, and which are the key filings in terms of products from there? For example, the likes of Axiom generic?
So Goa is certainly very important to us, for sure. There's no questions about that. This, along with, in fact, our facility at Indore, Pathampur, would form bulk of our turnover of formulations in the U.S. But to reassure you, there's absolutely no issues of any stoppage of production or anything of that kind from Goa.
Okay, fair enough. Just a couple of more questions then, Mr. Ramesh, since we have you with us. Has the Indore facility been inspected as well? Because we do understand there's a US FDA team in India at this point.
We had that some time ago, and there were no major issues there.
All right. Just coming to the earnings, the U.S. business definitely disappointed this quarter as per what the brokerage reports have come through. Can you just tell us what your outlook or what your run rate in the next couple of quarters would be for the U.S. business? Would it still be a sub $200 million figure?
You should appreciate that it's not as though it's coming as a surprise, really, because we've always said that there has actually been, there's going to be an impact because of the fact that there has been a slowdown on approvals. In fact, no major. Whilst we actually had 4 launches during the course of this, there were nothing which was significantly major. So you're actually comparing, in fact, this quarter's performance with, in fact, the first quarter of the last year, where there was significant, ramping up because of certain products that we introduced.
But if I look at it on a sequential basis as well, sir, there has been a come-off in the U.S. sales, even on a Q-on-Q basis. I know Q1 FY15 was a high base, but talk to us about a sequential run rate as well.
No, so this is because of the fact that, the previous quarter you also had, in fact, a brands business which contributed significantly because it was actually the flu season, right? And you had, cephalosporins is still a major portion of our, a good portion of our, in fact, turnover in the U.S. So products like Suprax did well in the previous quarter, and thus would expect this would, in the normal course, be expected to go down. And, of course, to add to that, there was a genericization of Suprax itself. So to the extent, the brands business has come down quite a bit, and that's what has contributed to, in fact, reduction in the U.S. turnover.
And what would your India run rate be going forward and your other geographies?
India continues to do exceedingly well. It's close to the, so our growth rate in India this quarter itself is close to about 16% year on year. And if you compare with the previous quarter, it's close to about 33%. India continues to do very well, and you're very bullish about India. For that matter, actually, we are doing fairly well in in other geographies also.
Yeah.
Japan is a steady contributor, of course, albeit with, in fact, a depreciated currency, which impacts when it comes to translation into rupees. Other contributors have included, our Philippines business, which is doing fairly well on a year-on-year basis. And, of course, Pharma Dynamics in South Africa continues to do well, though, of course, there is, of course, a depreciation of the currency there as well. And of course, Europe, we are expecting to ramp up out there. So we are fairly bullish about our business for the long term.
In terms of an Axiom generic launch, when can we expect a possible approval from the US FDA? What is the status of that?
We believe this, slowing down of approvals, the lack of approvals that continue perhaps for the next quarter as well. But we certainly think that there will be more approvals coming in towards the latter half of the year, which is the second half. So perhaps the end of third quarter and the fourth quarter would see much better results.
Just coming back to the acquisition bid, you've indicated that you think Gavis would grow 3x by FY18. That's about $300 million. Would this be back-ended? Could you give us how much do you expect in FY16, 17, and thereby 18?
There is a program of evolution, obviously, and you're right about the fact that we do expect it to go about 3 times by 2018. If you're speaking about back-ended, are you saying that the production will happen out of India?
No, we just wanted to know that how do you, plan to reach the $300 million from 100? Would we see incremental growth coming in every quarter, or would you reach the $300 million only towards the end?
No. I think there's going to be a gradual evolution in the next 3 years. So it's going to be a ramp up for the next 3 years, coming in from, in fact, the existing pipeline as well as from the future pipeline.
Okay. You've got 3 acquisitions or some sort of inorganic strategy that you've done in the past couple of weeks or months itself. So are you contemplating, is there some due diligence happening on any other inorganic front that we can hear of? Or which are the other geographies that you'd be really interested in terms of expanding your foothold into after this acquisition?
So this geographical spread, which included, in fact, our forays into Russia as well as into Brazil, have been in line with our strategy, which we had outlined in the past. And obviously, we need to concentrate on actually consolidating on those, integrating those. The good thing about, in fact, the generic business is that the same portfolio could be perhaps leveraged across several geographies, and that's why this, the geographic expansion becomes important to us. But I've also said that we would be interested in specialty, so specialty assets, we'd be looking at those as well.
Okay, you said the fundraising is an enabling resolution. The point is taken. Are you going to be taking it forward in terms of making it come through in terms of fundraising this year? Anything which could be sub 7,000 crores, any route that you could be looking at?
Nothing is on the anvil. As I said, it's just an enabling resolution at this stage.
Okay. And a quick word on your margins, sir. What can we expect the margins to average at in FY16?
So our EBITDA margins, for this quarter, were close to about 29%, really. If you look at last year, it was fairly, pretty good EBITDA margins for the full year as well. But as you said, EBITDA margins don't necessarily, are not linear in terms of growth. We really think that there would be a phase of consolidation, and then there'd be a ramp up coming up in terms of, it's kind of a staircase approach. Obviously, because we're also investing ahead of the curve when it comes to, in fact, facilities, production facilities, in terms of R&D and so on. So all these take a toll as well. So we do believe that it will stabilize between 26 to 29%, and then after some time to take off to a different level.
Okay, fair enough. So we leave it on that note. Thank you very much for joining in and talking to us. So that is the Lupin management. Remember, it was one of the most talked about stocks yesterday, and today also there's a little bit of a downtick coming in. Important clarification coming in on Wintac in particular, where the stock is off the day's high, where they have said that it is not a part of the Gavis acquisition that they made, worth around $880 million. Remember, Gavis owns over 50% within Wintac Limited, but the management has clarified that it is not a part of the acquisition. A lot of more details coming in, which we'll be getting through the day to you.